Good afternoon, everyone. I'm Cooper Hainy, grain marketing specialist out of our Millette location, bringing you the weekly market update. Markets this week steady to firmer. Tension in the Middle East has driven oil prices up, commodity markets following along with dryness concerns in portions of the major crop producing areas. For corn this week, continued uncertainty in the Middle East surrounding the Strait of Hormuz has caused the oil markets to stay elevated, which in turn has kept grain markets propped up as well. The U.S. is off to a good start for planting so far, and as of Monday, the USDA reported 25% of corn acres planted so far versus 22% the same week last year, and the 5-year average of 19%. Export demand for corn continues to remain strong, coupled with acre concerns, and a strong oil and energy market has done a good job so far of keeping the market bulls in control. These futures today rose to the highest level since 2023, topping at 501 3/4, but pulling back to settle at 498 3/4. The question is, next week, will we go back and test the $5 level, or will we pull back and try and find some support? July corn closed at 480 1/4 today, with resistance at the 485 level and support around 470. The soybean market finished up on the week, likely due to a boost from the other commodity markets. Demand for beans right now is mixed. Soy crush margins are excellent, which is keeping local demand elevated, but our global exports continue to be very underwhelming. Like corn, beans are also off to a good start for planting at 23% done as of Monday versus 17% the prior week and 12% the same week last year. While the market is watching all these fundamentals, the meeting between President Trump and China in mid-May is still at the back of traders' minds. July bean resistance at 1235 to 1245 futures and support around the 1160 to 1165 range. Drought and dryness concerns have been the main driver of wheat prices over the last couple of weeks, with parts of the U.S.'s major wheat producing areas being in heavy drought. Winter wheat conditions rated 30% good to excellent versus 49% last year. U.S. wheat export prices were high before the rally. The rally has only made U.S. wheat less competitive globally. Minneapolis spring wheat topped at 723 1/4 on Wednesday, which is a new contract high and will likely hold support around the 670 futures level. Kansas City wheat traded up to 718 1/2 on Wednesday as well on the July, and will likely find support around the 650 to 660 futures level. With the recent rally in commodity prices, might be a good time to look at alternative pricing methods. For example, a December 27 knockout corn accumulator currently has a 533 futures accumulation price, which might be a good level to start pricing bushels for next year. For more information on our other marketing opportunities, or if you would like up-to-date market info, please contact your local grain marketing specialist. We're here to help. That's what we do.